we are very delighted to have Dr. Abdelilah Belatik. He is right now the Secretary General of the General Council for Islamic Banks and Financial Institutions. CIBAFI, we know CIBAFI for many of the events. It is like the Banks Association of the Islamic Banks. I'm sure Dr. Abdullah will talk about that a bit, but they have more than 130 something banks as members, and this is especially relevant to us because their members are from the Islamic banks. And I know Dr. Abdelilah long before when he was working for IFSB. He has a long international experience in various very prestigious organizations, and since 2014 he is the General Secretary of CIBAFI. And I had the pleasure to follow him during that period, even before. And mashallah, he took the CIBAFI to a different stage. They are very up to date. They are very future oriented. They are looking at the most recent developments, and they are making the Islamic banks ready for the future. So I had the pleasure to attend their panels, various panels, as the speaker and also as the listener, as participant. And I had the great pleasure to learn from their activities. I believe the biggest role in here is belong to Dr. Abdelilah because he is not just a doctor. He knows the practice. He has a practical experience from IFSB, from private organizations, leading private organizations. And they have very nice reports also, I should mention, especially for our PhD students. They have a Fintech report recently came out. I believe Dr. Abdelilah will talk more about them, but I really encourage you all to follow CIBAFI. I believe they are doing a great job, especially in this sort of times when we have the COVID-19 and all the banking, Islamic banking is started to be reshaped. They are giving emphasis to fintech sustainability. So I believe we should all follow these developments from the academic perspective as well, because the life seems to be changing much quicker and the business is not as usual. And even today's topic is the signifier of that. Dr. Abdelilah will be talking about open banking, artificial intelligence, machine learning. I mean, these are all relatively new stuff. So, Dr. Abdelilah, thank you very much kindly accepting our invitation. Among all your busy schedule, I know you are quite busy doing many different things at the same time. Thank you very much for being with us today, and I look forward to your speech. The floor is yours, please.
Thank you so much, Prof. Ahmed Aysan. Bismillah ar-Rahman ar-Rahim, wa salatu wa salam ala Mawlana Rasulullah wa alihi wa sahbihi ajma'in. Brother Prof. Ahmed Aysan, dear colleagues and friends, distinguished, Assalamu alaikum wa rahmatullahi wa barakatuh, and good morning, good evening, good afternoon to you, wherever you are. It's a great pleasure and honor for me to be here with you today to discuss and to share some thoughts on this very important topic and timely topic, which is actually very relevant, has been relevant for the last few years, and is coming to the front now with the pandemic, the COVID-19 situation, which is accelerating all these processes, innovations, and financial technologies. Let me first of all, before I start, I would like to thank my friend Prof. Ahmed Aysan and Hamad bin Khalifa University College of Islamic Studies for this invitation. It's a great honor to be here. So our talk today will be on, let me first share my presentation. Our talk today will be around, I mean, we talk a lot about fintech, financial technologies, and it encompasses a broad spectrum of broad topics, broad areas. That's maybe coming to a definition of it. It may not be that easy to be complete. So to make things a little bit more focused, we choose topics that we believe and we think they are at the forefront of what is happening in the digitalization and the financial technologies, and which is impacting currently the financial markets, and this impact will be increasing over time. I have just a few maybe logistics. Again, I think we will have the opportunity to be responding to questions in case you have. I usually ask some questions to audiences, but it won't be that easy for now for this setting. But the second thing which I usually have is I drink quite a lot of water, so sorry for this if it disturbs you. So, as I said, our thoughts today, our talk will be focusing on items that we believe are at the forefront of the financial technologies, and perhaps are taking now great importance and will be taking more and more importance over time, and will potentially have a really significant impact on financial markets, as innovations and technologies have had in the past in many different markets that we see. So our talk will be today we will be looking at a general introduction on financial technologies in general. Then we will be looking at the financial sector response to financial technologies. We will move to see some of the opportunities and challenges raised by this, and then where Islamic finance lies within this situation. And we will be looking at perhaps some of the use cases of this, and which we are, as I said, think have great importance. These include open banking, AI, distributed ledger technologies, and other cryptocurrencies, and so on. And then we will open maybe for some discussions about any questions on that. Well, I mean, technological revolution is a major change impacting different sectors and industries. It started perhaps earlier, maybe 20, 30 years or even before, impacting significant sectors like the hospitality sector, the travel sector, and many others. Technology started with the internet and so on. When we look at the financial technologies, perhaps the Fintech 1.0 can be tracked back to the 19th century with the start of the transatlantic cable, Fedwire, and so on, and some others. But what we have seen, and you can look at this from 1886 to 1967, perhaps the pace of change have been very, very slow. From 1967 to 2008, there is a kind of jump in the speed of change, but still not very drastic. But now let's compare just 10 years or 13 years from the financial crisis to now, and we see the speed of changes that has happened for the last maybe 5 to 10 years. And looking now at what is happening currently, we can say since last year, mid of last year to now, projects for most financial firms or like banks or Islamic banks or other banks anyways, most of them have accelerated the speed of digitalization. Perhaps projects that were planned for 3 to 5 years down the road, they have been brought forward for now. So there is an acceleration of this, and we think that this acceleration will be even will reach more speed for the next few years, and perhaps 5-10 years. There can be a significant change or significant impact, or perhaps the face of financial sector will have a significant change. So again, looking back at some of these the changes, so what we can see is that on talking about financial technologies, as I said, there is a wide spectrum of things, from payment solutions, which are perhaps some of the most widely used by many financial firms, the e-trading, cryptocurrencies, robo-advisors, and so on. But beyond this, what we see is, for instance, and which will play a significant role in this acceleration process, is perhaps this artificial intelligence, big data use, distributed ledger technologies, biometric, and machine learning, which have very significant. So the advancements in these technologies allow the starting of new services, bringing new opportunities with innovations. Now, going a little bit further, there is, with this, the open banking perhaps has and will probably have some significant impact again on the financial sector, and it is having right now. It opens opportunities, but it also have some downside, if we can say. It brings some risks, cyber security risk, data protection, etc., and so on. And we have seen, Prof. Ahmet has mentioned our report, Global Islamic Bankers Survey. For the last 3 years, we see that the perception of the risks on financial technologies has increased. So the financial technology risk now is becoming among the top 3 risks by the Islamic banks. But similarly, the opportunities are rising as well. So there are many opportunities, but have to follow with the risks. And the importance of this is that we need to bring this at the forefront so that we allow these debates and discussions to take leverage on the opportunities and see how the risks can be managed. So in general, for the financial sector's response to Fintech, there are some perhaps if we can look at it from the supply and demand side. So the technology, because of the speed of new innovations, have brought forward new disruptions. So the technological developments have brought forward perhaps the introduction from the supply side or by fintech companies on niche markets that perhaps were underserved by the conventional or the conventional financial institutions, Islamic financial institutions, in a conventional way. So this brought an opportunity for the new entrants to offer new services. And this itself, combined with customer expectation for this, of course, new generations of tech-savvy users, they expect to be doing everything from the smart devices, laptops, and so on. So this perhaps brings higher competitiveness of the markets. So there are some, of course, I hear some in the back. So there are some actions from financial authorities as well to embrace technology. So in general, what we is that financial institutions different approaches related to financial technologies. I think there is a need.
We do hear you. I guess everybody is muted. Yes. You may go ahead.
Is it okay now?
There is some echoing from the background, but
yeah,
it is all right. You can go ahead, sir.
I mean, it is understandable, but still there is kind of echo.
Okay, thank you. So we see 3 different approaches to reactions to financial technologies. I hear an echo, sorry. So first of all, there is institutions or Islamic finance institutions that have started developing the internal capabilities related to financial technologies, to develop IT infrastructure. They're for their own, so trying to have their own response or their own service related to financial technologies. The second approach but this perhaps the first one is more of big size banks or big size financial institutions that can invest heavily in IT infrastructure. The second approach is a collaboration and partnership with fintech startups and other service providers. And the third is buying and investing in either startups or buying solutions from startup companies. From the financial authorities' perspectives, there was perhaps you can see it in three major stages. First was most related were kind of without significant interests or without significant involvement, if we can say. Then after, when there was a realization that there is perhaps a risks for customers and financial stability, we see regulators starting to look a little bit further. And more recent, perhaps a few years back, we see starting regulators developing relevant framework to perhaps better control this industry and having some more proactive approach to it. There has been perhaps some licensing for new startups. Some countries, they have had some sandboxes, regulatory sandboxes, allowing new startups to try their service offering before having a formal regulatory framework within which they will be working. And some technologies have, of course, received more attention. Regulators, some of them have been particularly active on APIs, application programming interfaces, cloud computing, biometric-based identification, and so on. So on the other hand, more recent, so the artificial intelligence and central banks, digital currencies, they have gained more momentum, and we think they will have perhaps more in the future. We will be seeing this a little bit later in this presentation. So in general, I mean, on the financial sector's response to fintech, there have been some initiatives by various regulatory bodies in Europe and elsewhere. But what we see more is we start to realize for the last few years that, of course, for example, Basel Committee starts looking at what are the sound practices for fintech developments for banks and for bank supervisors. The EU Commission have an action plan for this. And looking at cybersecurity, Basel Committee have had the reports on this, on cybersecurity and what it entails for the financial sectors. The Financial Stability Board also have done recently a lot of work on these areas, because now we realize that this starts to first of all may have financial stability issues and having some size, a scale that will have an impact on global financial stability, or may have a global financial stability impact in future if there are no actions that are done to mitigate the potential risks. There is a number of issues related to anti-money laundering and other things, and data privacy, transparency, and so on. So looking at opportunities and challenges of fintech adoption, first of all, there are certainly a lot of opportunities, because when there are some underserved markets, participants, let's say conventional, usual banking business model. So, and there was like a new startups that started offering services to these niche markets. So, and this have, of course, brought to the front national regulatory bodies to adapt regulatory frameworks to ensure the orderly development and stability of financial system, whilst still allowing new services to be offered by these startups. So of course, fintech holds significant benefits for users of financial services, but also it has some challenges and some risks. Perhaps we can just briefly see some of the potential opportunities. Some of them is being lower transaction costs and faster banking services, and we see this the last few years. For example, the transfers have been perhaps some more widely used by some other like different types of different service providers, better and more tailored banking services. We see a lot of digital innovations in the space for this. There is a potential impact on financial stability, positive impact, because if you have higher competition, you will have the fragmentation of the banking services will reduce the systemic risks. Financial inclusion perhaps is one also of the very important aspects of this, by reaching out more easily to MSMEs and other underserved and unbanked customers. And we see this, for instance, perhaps one of the reasons why we see fintech is being developed and very aggressively expanding in African markets and Asian, Southeast Asia, Indonesia, Malaysia, and Africa, and so on. To follow with this trend, there is this RegTech and SupTech, where we see regulators taking more interest on how to use financial technologies, on the regulation, and of course also on the supervision. Of course, again, with opportunities, there are some risks. Perhaps some of the important ones is strategic risks for banks, or Islamic or non-Islamic or conventional, not to follow these trends and to lose significant market share. So this is very important, and this is why at CIBAFI we keep highlighting this with members, and we keep discussing on this. And we have had a number of initiatives to promote this, to discuss with the members at the board and others. Various reports have been issued by us for the last few years. And realizing the importance of this, we have this year on the 2021, the CIBAFI award for this year is on adoption of financial technologies, and seeing who are the most active banks in this space, to promote what they are doing and to give them some recognition. Some of the other risks, of course, related to this is high operational risks. You introduce new technologies, new innovations. You will have perhaps, if you don't have the capacity, human capital capacity, this will increase the risks related to operational risks. Risks related to consumer will have to think on new models for consumer protection as well. And there is some work here done by different bodies globally. And perhaps some of most important for regulators, most important risk is the compliance and anti-money laundering risks, where there is a difficulty in some cases to track or to control better what is happening in this space. The data privacy is also one very important aspect, because when everything is digitalized, higher risk of losing data related to customers will happen. And probably one of the most important risks that we have seen is this increasing for the last year and this year is on the cyber security risks, which is kind of obvious on what is happening. Let's now talk a little bit about fintech and Islamic finance. Where do Islamic banks position themselves in this on the fintech? It's maybe 4 or 5 years ago when we started talking to banks on these issues, we realized that there was important or high caution at the time. Many of them were understanding the issues or the importance of what is happening. But we were really pleased with our last report, the Global Islamic Bankers Survey, was issued in 2020, when we see that, for example, when the perception of the CEOs of Islamic banks about adoption of fintech and related digital transformations in Islamic banking. So 50% of them, they believe it is at the same level, and 25% of the CEOs believe that they are ahead or very ahead of conventional banks on this. And this is probably in their jurisdictions, because they have been very active on this. On talking about what are the technologies that are used, what are the most favored approach for acquiring capacity on fintech, we see that buying services from fintech company is favored by 70%, and in-house development 50%, and engage in joint partnership as a choice is also equally at 50%. Some of the perhaps top three areas where Islamic banks they started working on. But of course, the first one is on mobile banking and payment solutions. This is kind of obvious in a way, and it has been accelerated again, with what's happening due to the COVID-19 pandemic, because either you do it or you have to surrender to the competition. That's just simple. The open banking, even though it is a new concept, we see that many of the banks, they start looking at it because they realize it's very important, and we will see a little bit more details on that. There is, of course, machine learning and big data comes at 3. So the 3 top are the mobile banking, open banking, machine learning, and big data. That are the interest of Islamic banks. What they think, how it is impacting their activities, the top 3 again is on payments and settlements, obviously, with mobile banking, payments, and so on, corporate finance, and human resources. And again, you see human resources. Why? Because it seems there is a struggle to find the right capabilities, the right human capital to address these new innovations and new technologies. So with this very large talk about the fintech in general, we have selected a few items that we think are very, very important, and we'll dig a little bit deeper into these concepts and to see how they are going to impact, or how they are impacting already the financial sector and the Islamic banks as well. So we look at the open banking, artificial intelligence, and distributed ledger technologies. So when we talk in general about fintech adoptions, so there is a requirement of 3 different aspects. First of all, you have policy enablers. So how are regulators, are they supporting it? Are they more cautious? Then you have enabling technologies. Do we have the right technologies at this time to address those? And then how is fintech, how are fintech activities being performed in different sectors of financial industry? Are market players interested in bringing new services using financial technologies or no? When you have these three elements, then this is kind of favor the use of financial technologies for the consumer's benefit. So our case study will look at this AI, DLT, and enabling technology, open banking with some policy initiatives, and the disruption that it is bringing to the business model of operations in the usual financial sector, how it is conducted. So talking about open banking, what is it really? So in short, this new business model allowing banks to share the data of their customers with their customers' consent, of course, with third-party providers. So this is done through what we call a technology called the application programming interfaces, APIs, which allows other banks, for instance, even though they are not your bank, they can access your information, or other service providers, they can access your information. If you wish to do so, allow your bank to share your data, which then will allow the third-party providers to reach out to you with new services if they see that perhaps you are not well served with your current offering. So what does this have I mean, why is this important? In a way, I mean, when it is seen by many of the regulators and policymakers is that it will be increasing competition and it will be improving the service offering. So it has started a few years ago, perhaps for some of the most advanced in this world, the UK, the United Kingdom, and Australia, with, and European Union, of course, also on the introduction of the Payment Services Directive. And so we see that's more at the beginning, starting on the payment services, perhaps the most widely used, but there are other services actually used as there is, for example, Hong Kong Monetary Authority that issued an open API framework, helping banks of how they could implement the API. Looking at, for example, on the Islamic bank side, where Islamic banking has been operating, perhaps some of the major countries or jurisdictions that have introduced open banking, Malaysia, of course, with the release of open banking guidelines for industry participants. This is for both Islamic and traditional financial institutions already in 2 or 3 years back. The Bahrain have also issued this in 2018, and there is like a banking framework that ensures holistic implementation of open banking services by the industry. Saudi Arabia, it is introducing an open banking policy. SAMA, of course, the central bank, will be now highly promoting and advancing digital innovations in the financial sector. And there is a plan to issue guidelines for open banking by next year. So what are the challenges, again, and the opportunities brought forward by open banking? This, in a way, if you allow third-party providers to access data of customers, this could generate insights from shared data of customers, which will help identifying new businesses, need of businesses for customers, and perhaps new offering facilitating the works of customers or MSMEs, perhaps in particular. This will allow customers to have access perhaps more easily to services offered by third-party providers. And in this way, through collaboration with banks, will help banks to retain their existing customers, because there will be like an integration of this. Other perhaps important matters, if you have an API framework, then you allow accounting, consulting, advisory platforms to embed their services within your banking framework and within your offering, which will facilitate again the services of the customers and the SMEs. There is also the opportunity with these digitalizations. Banks can reduce time spent by employees on some of the administrative tasks and procedures. This will bring about some perhaps efficiencies. And of course, the open banking will allow to reach some of the unbanked and tech-savvy communities, and especially the youngs. There are, of course, with most of these opportunities, there are also challenges. Perhaps one of the first, and you may be thinking about it, is on the data privacy and security and protection of customer data, how this will be done. So there are a number of protocols that are being used for this. There is cybersecurity, of course, while using APIs, and how to ensure there are no data breaches when you have an open framework. Okay, so I think these are some of the challenges by the open banking, and then perhaps we move to the next use case of artificial intelligence. Artificial intelligence, even though it is not new, has been around for decades. But what is now the new thing is that for the last maybe 5-10 years, with the advance of the computer power, this has become really now a sort of reality. So, and with the new innovations and technology, so AI is used now, it's like an umbrella term used to cover different technologies coming together, such as machine learning, cognitive computing, natural language processing, and combined with automation. And of course, this with the increased size of available big data analytics. So there are different technologies used in this, and supervised learning, reinforced learning, unsupervised learning. We're not going into details, but this is the new release on deep learning and machine learning that brought about some new and heightened advancements in the technology in AI, and is being now used and explored in a really large number of services, from marketing to climate change, to financial services, to sustainability, to many others. So use cases of artificial intelligence are tremendous currently. In terms of financial services, they are being used in different areas. We will be looking at them. But some of the issues, again, they happen. They are here. So the Financial Stability Board again have had some interest on this recently. But they also indicated that because of AI and machine learning applications are new, perhaps there is a lack of standards. UNESCO last year conducted a large consultation on bringing perhaps standards on ethics for AI, perhaps, which is some of the new and potential problems that could happen and in different sectors, not only for the financial, but for many other sectors. Some of the growth drivers for artificial intelligence is that technology, of course, the improvements that has happened the last few years, and maybe 5-10 years now, has been tremendous, and improvements in computing power and data availability algorithm. This has brought forward new innovations and allowed new uses for the financial sector. The availability of data, this is very important, and the more now we see that it also brings some issues currently, but is being now addressed, is like how is data, how it is structured. So there is high also profitability and potential for cost reduction, revenue gains, and improvements, risk management. On the regulation, there is still, and we can see this, there is still not sure how in cases how to deal with artificial intelligence, but it is also used on the regulatory side for the financial sector to help in detecting fraud risk and anti-money laundering and so on. So we have, as we see, we have from the supply side some factors that have brought AI now at the front, and from the demand side there is also convergence of this approach. When we look at the current uses of AI in the financial sector, we see various areas. Some of them and most focus on when we see like the customer-focused users on credit scoring. So a number of banks now, big banks, they are using AI to assess the credit worthiness of customers, on doing, on the pricing, also for the pricing of the credits. There is also some of the facing interfaces with customers on chatbots, virtual assistants, and so on. On operations focused, there are models of risk management and that use AI. And there is also for the fraud detection and compliance, there are a number of initiatives that are used. On the regulatory front, there are a number of regulators globally that are using, China, Hong Kong, very active on this, and other countries using it also for macroprudential surveillance, and using this for the supervision process with the banks. So why is this important also for the banks themselves? If the regulators use it, if regulators use AI for their supervision, over time they will need to use some data, and that data will need to be structured in certain ways, and therefore they will be requiring banks to provide data following certain structures. And again, having this data ready, this is one of the biggest issues, and perhaps when it will be ready, then also will allow for banks to use it for their own internal compliance and operations. So some of the advantages of AI and effects on financial markets, perhaps, and the most advantageous is lowering trading costs when we look at financial markets, and reducing transaction costs in operations like trading and so on. Effects on financial institutions, they have, they will allow perhaps encourage collaboration between financial institutions and other industries, and having this cross-sector service offering between banks and other services. And effects on investors and customers. Consumers, of course, they will enjoy lower fees by using this AI technologies by banks. Banks there, and we have seen, for instance, these robo-advisors using AI and so on, which allow a reduction of costs very importantly. And there will be, while knowing better the customers, having more customized and personalized financial services using big data. Some water. So again, as we have seen in previous cases, are opportunities, but again, there are potential disadvantages or issues that we need to take care of. I think in general, AI in all sectors, it has some pitfalls that are quite known and or perhaps unknown, if we can say. Maybe one of the most significant, in my view, is this black box issue, where you have this machine learning algorithm. They can learn over time, and after you will have your input data, and there your input data will have an output decision or advice on what to do or what decision is. But in the middle, there is a sort of black box where you don't know what has happened, how this AI has arrived to that final decision. I think this is one of the biggest issues in terms of transparency to customers, and a number of other issues related to this specific point. For example, if you have to explain to regulators, if you have a credit score for a certain customer, if you have an AI with some big data or analytics on a particular client, have assessed, for example, not to give a credit to a certain customer or lower or higher, whatever, and you cannot explain this to your auditor or your regulator, it will be somewhat a weird situation. There is also the issue of bias in general, because you are using data that may contain bias. So can be gender bias, can be whatever, religious bias or whatever. And will lead the AI to have decisions that will also be biased and reflect what is actually in the data in general for this learning, the data that has been used to learn. There are some perhaps bigger issues, if you can say, is around the lack of clarity on responsibility. If something happened on a decision, for instance, who is responsible for that? And this, for many cases, can be also for financial services or for other cases. And there is, as we said earlier, there is a lack of standards and perhaps regulations that will define this. And on the ethics side, as we said, because of this gender bias and so on, or other biases that can happen and can result from AI, the UNESCO is working on very actively on something to bring about like ethics or standards ethics for artificial intelligence. I think we move now to the next use case, which is distributed ledger technology. The most famous, and all of you have certainly heard of this and know somewhat about it, is the blockchain. It is seen, or it is thought to be that it will have potential, or it has a very high potential to disrupt payments, clearing, settlements, and related activities. To show this, like in a framework here, is when you have a centralized versus decentralized system, and this is what is being brought by the blockchain. It's this decentralized way, and how it will be affecting financial services and markets. Perhaps there are a number of ways. We know that there are a number of institutions globally that are using this, from the payments and settlements, foreign exchange platforms that directly match end users and they have become and they have begun to complement and in some places replace traditional interbank payment systems. This is already happening. For trade finance, DLT might enable participants from different sectors, for example, finance and freight shipping, to interact and share information. A number of initiatives used in this sense, for instance, by the Islamic Trade and Finance Corporation of the IDB, are using things related to this. You have the capital markets, of course, the tokenizations of securities and many other users. On the lending, online lending platforms, they are using this also as a decentralized service offering for lending. Of course, again, having benefits, but also having some potential risks, potential uncertainty about operational and security issues arising from technology. This is the standard for all the technology-driven innovations, including DLT. There is potentially some lack of interoperability because this is something new. So some institutions or regulators or international bodies are working on bringing up some standards on how this will be working together. I mean, by different countries across border, or even within the same country. There is also perhaps the absence of effective and robust governance framework for this, in terms of responsibilities and so on. And of course, there is the biggest, which is also related to all these technologies, is the issues related to data protection, data integrity, immutability, and privacy. Again, when we look at some of the potential uses and like benefits of the DLT and blockchain, and processing speed and availability of assets and funds, improving network resilience to contribute to data management, reducing operational and financial risks, and increasing perhaps transparency in transaction record keeping. Some of the uses, of course, of this DLT and blockchain is the cryptocurrencies, even though we call it cryptocurrencies, but we will see a bit of currency is perhaps a point that needs to be discussed. Cryptocurrencies, what are they? A new form of currency and promise to maintain trust in the stability of their value through the use of technology. There is a computer code specifying the and again decentralized network participants. When we see when this has started, we see like the reaction of financial. Watch and wait and see what's happening with the Bitcoin and some others, and we see like, for example, some countries they started looking at it more. I mean, even on the names of the terms used by countries to reference currency, for example, Argentina and Australia, Canada and others, and payment tokens and so on. But I think the definition of the Basel Committee on Banking Supervision calling it a crypto asset is perhaps the most appropriate and the one which is currently most used by regulatory bodies globally. When regulators started to look at this, the cryptocurrencies at the beginning, so there were, as we said, various approaches or thinking on how to deal with this. Some of the countries, they were just watching and no intervention. Some others, they prohibited the use of it. For example, I mean, Algeria, Ecuador, Bolivia, and Egypt. Some others, they allowed it, but without saying either yes or no. There were at the beginning as many of there were purpose and of initial coin offerings until it was banned by China and others, and Pakistan and some other countries, even Morocco. They don't allow the use of Bitcoin for various reasons. Some regulatory bodies, they don't mind allowing the markets using cryptocurrency. Some of the issues related to currencies or crypto assets, if we can say, there is the liquidity risks, and we see if we look at it, we see things are happening, and the very high volatility of this market, sometimes going from 5,000, 10,000 to 20,000, 30,000, 40,000, 50,000, 60,000. So we don't know where it is going. So this brings some very difficult situation on how to manage, especially if it is used by banks as a currency. Why it's difficult to say, do we consider it as a currency? First of all, as we say, there is this test of three categories of three features or characteristics. Are they used as a unit account? The significance generally not be used as a reliable medium of exchange or store of value. So these three categories perhaps do not fit entirely for these cryptocurrencies to be called as a currency, even though we can also always find the exception. We heard last week increase about $1.5 billion of Bitcoin, and will be allowing customers to buy cars with using Bitcoin. But still, it's not really something which is common in like usual day life of having being able to buy with cryptocurrency or bitcoins in particular or some similar. One important feature also, which is in a way decentralized and also then of course not backed by any government or other authority. So who is the legal tender of this? This perhaps may bring some problems or issues for companies or for even for countries. But looking at these cryptocurrencies, I think some of the important happenings when it started, even though a few years ago, and there was like more talk about it 4 or 5 years, especially Bitcoin and new issuances of many of the tokens and the coins. There was this for the regulatory bodies, as we can see, like as we said before, kind of wait and see or watching. Maybe one event which happened 2 years ago, which was like a significant change, is the announcement by Facebook on the issuance of the currency or like use basket season. So having this big tech interested in this was like an alarm bell for the regulators to have to do some actions on this. So some of the points they started, because if you have this big tech or the GAFA or others or similar, Google, Facebook, Apple, and so on, or Alibaba, Alipay, and so on, if they start having interest on this, you have really operators that will have a huge amount of data, and they have huge amounts of cash, and they have credibility with customers. So this is significant issue related to, if we say, on how there is this transparency, anti-money laundering problems that can happen with transactions related to cryptocurrencies, and there is issues related to financial stability and data protection and privacy. So looking at this, then there's some regulators, or perhaps many of the regulators, started then thinking of central bank digital currencies, following the trend and the demand side by the customers to have means of payment that are digital. So since last year, we have seen even at the Basel Committee on Banking Supervision, the establishment of an innovation hub. Many of the central banks, there was a paper by the Financial Stability Board and using a survey of banks, of central banks, on their use of cryptocurrencies or like central bank issued digital currency. So it showed that perhaps 80% of central banks, they are doing studies, research, or pilot studies on the central bank digital currencies. So far, I think most, perhaps the one that started earlier, was the Central Bank of China, that started in a project on this. There was also other banks, even or central banks in different countries in the Middle East, for instance, a project by UAE, and we'll go back to this a bit later on. UAE and Saudi Arabia Central Bank, there was initiative by the other. There is for instance, the European Central Bank have done a public consultation last year on the use of central bank digital currencies and to explore what kind of uses to be doing. So in a way, what are the thinking? What is the thinking of this? Is to see, is it going to be like for a wholesale basis, like payments between financial institutions and large commercial parties only, or it could be as a retail digital currency. So these are different uses. It has the potential of bringing a number of benefits. If you have continued access to central bank money, so this will increase perhaps financial stability and resilience. There will be increased payment diversity. This does not mean that there will be no cash, but it's like a new medium of payment that can be done. This can encourage financial inclusion, of course, and improve cross-border payments. For instance, if you have these projects between UAE and Saudi Arabia that are being worked on between UAE, China, and others. Actually, there are a number, most of the central banks currently are working on this, or exploring how they can work on it. And we have seen that with this COVID-19, many jurisdictions they did some transfers to citizens that were in difficult times because of the pandemic. So as this started, I mean, in a number of years already now, but we see this increasing, this trend. And for Central Bank of Europe, for instance, as we said, started a few months ago a consultation process, and it is expected to be working on or proposing something in the next few weeks on their approach to central bank digital currencies. Some of the issues, again, that can bring this is in a way, if you have, I think we see it in different areas. First of all, if you have a central bank that issues currency directly, that can be held directly by the customers, this is exactly disintermediation. So what would be the role then of banks if customers can go directly to central banks? This is one item. There is also issues, I mean, related to, I mean, the way that some of the thinking now on how to deal with this is perhaps to have to cap the amount of account that can be used by retail customers, few thousands of US dollar or euro, depending on country. Or maybe to have like beyond a certain level to put some like negative fee or negative interest, if you can say. If you have more than a certain amount, then you can pay, you have to pay certain amounts. So these are some of the potential issues, but again, it has also some benefits. And what we have seen globally, I mean, and we see it now, many either of the central bank, either they are doing research on this, and a large number they're doing some pilot studies on this and doing some trials, even and issuing reports and doing public consultations to see how they could deal with this potential. But we think this probably will have some merits and will have some impacts on the future of payments and also the banks, because you are replacing, you are adding a new mean of payment that would potentially could be outside of the financial intermediation as it is known now. I think we are reaching to our conclusion, and what we can see, and we have seen through the financial technologies in general, and the various cases of AI, open banking, digital currencies, central bank digital currencies, they represent a key growth driver. But again, there is all the players, I mean, there is a need, like all the players of the financial market, to keep up with the pace of change, not to be lagging behind. This is very, very important. Technologies such as big data, blockchain-based digital agreements, artificial intelligence, smart contracts. Actually, there is no way back. So it's really going forward. We see that the technologies have been progressing very, very fast. There is, and I think, well, the financial sector has not been impacted heavily so far. There has been impacted and going to be impacted. And perhaps one of the areas why not, because of the heavy regulation that it follows. So, but I mean, change is happening and will happen, and is getting faster. With the AI now, with the new technologies, with the 5G networks, everything now will be connected. The services will be perhaps interconnected as well, cross sectors. So the financial sector can still be at the center of this development, but also can be lagging behind if no action is really taken seriously. But the good thing is that we see in many of the Islamic banks, they have taken aggressive approaches. And as we said, the award that CIBAFI is going to give this year for the adoption of financial technologies, we were very pleased to see many of the very great initiatives by many of the Islamic banks on having some from mobile payments, internet platforms, to fully digital Islamic banks in different countries in the GCC, Middle East, or in other countries, even in Europe on this. So these are perhaps some very good developments, and we are pleased with this, and we continue to encourage our banks to be aware of all these new happenings, because the change has started and will not stop. So either we embrace it and perhaps we be at the forefront of this change, or we will be lagging behind. I think with this, I finished my presentation, and I will be happy to answer any of the questions that the audience might have.
Thank you, Dr. Abdelilah. You take us through all the fintech developments. So as you see from the academic perspective also, these are all new things, and we have to write papers on each and every point of what Dr. Abdelilah has presented. And we are looking forward to listening or learning more about the new reports that you are publishing and the awards, inshallah. Thank you very much again. Let me, so in the meantime, while you are preparing for your questions, let me make some announcements. We have a FinTech working group. We started this semester. So far, we have hosted 5 distinguished speakers. This one is College of Islamic Studies talk series, but we have also, and actually this is also a FinTech seminar. But so far we have hosted a professor from UK. He talked about the cryptocurrencies and blockchain. And later from Dr. Mutas, we learn about the FinTech report in Malaysia. They prepared the report. And later on, we have various distinguished speakers again. Dr. Ala has presented the work on Skook, how to do it through FinTech, and then later on, we have from Australian Blockchain Society, Mr. Mohammed. So he's with us probably today. I saw his name. So last week, he made a very nice presentation, very informative work on blockchain and FinTech matters. So, and also we have one practitioner, the co-founder of EasyCo. He also presented. So, if you want to be part of this FinTech Working Group seminar series, I write the link into the chat box. You may join our WhatsApp group to be more informed about these seminars. So I take this opportunity to make the announcement because we reach up to 119 people during your talk, Dr. Abdelilah. So it was very insightful. So let me start actually while waiting for other questions. Is it at the same time frightening for the banks for this to have this fintech developments, Dr. Abdelilah? Because that, as you described, we will probably not have the branches. We will not have many of the bank operations done by the individuals. Instead, everything will be done through the computers. And probably there will be too much downsizing in the banking industry. Do you see, is it a frightening thing among your member banks? And also, could it be also an opportunity for the smaller banks? Because recently I was talking with the Kiev, Kuwait Türk of Germany, and they're actually having like a platform of fintechs. They're providing the banking services, but they're having about 30 fintechs within themselves. So in a sense, for smaller banks, instead of opening up new branches, probably they will include more of fintechs into their structure, and they will even provide more with a limited number of customers. And do you think that is it a more of an opportunity for the smaller banks or the bigger banks? And and related question is, Islamic banks might have an advantage there as well. And you rightly mentioned that Islamic banks are not lagging behind at all in fintech issues. Even they are ahead of the game. I know it from Turkey, for example, there is an index, and all the Islamic banks are among the first 10, even though their sizes are relatively smaller. But in the fintech, they are even better. So, do you think that it could be an opportunity for relatively smaller banks like the Islamic banks in many parts of the OIC countries?
Yeah, no, I think it's entirely. So if talking from my own personal view, I think it's not a threat. It is not a threat to the financial sector and to Islamic banks, assuming they take action. And you rightly mentioned, because what is it? If it is now, it's kind of bringing costs down. Now you don't need actually, in reality, say, for example, if you want, you need perhaps tens of millions of dollars or hundreds of millions of dollars. You don't need that much now to have financial service to do. Area like this requiring the
Dr. I cannot hear you well. May you turn off your video? Probably we can hear you better. Okay, or let's try, because I couldn't hear you. I believe the others are the same. Yeah, let's go like that. Let me turn off mine as well.
Okay, sorry for that. So, well, I think you rightly mentioned that it is, my opinion, my personal opinion is that these financial technologies in general are not a threat for the Islamic banks, the way they operate right now, and perhaps they constitute an opportunity, but assuming they would be acting now, they would be doing some new actions and not just waiting. So if you wait, of course, you will have other startups that will be doing. The cost of doing banking now is not as much high as it was perhaps 10, 20 years or 30 years ago. With cloud computing now, with shared platforms, with open banking, you can offer services at much lower cost than it used to be in the past. So this, of course, will bring higher competitiveness, but for the benefits of the market. So smaller Islamic banks, they can reach out to larger size or larger segment of the market, because they don't need necessarily to open as much branches that they had to do in the past. Now again, we say, is this a threat? I don't believe it is, because changes happen and have been happening over centuries. And each time we think, okay, you have these new technologies, new innovations, you will have problems of work, you have unemployment and so on, but you have perhaps some downside on one side, but you have some upside on the others. So I think, but again, there is a need to be taking these opportunities and working to take leverage on them. And perhaps, of course, there are risks, as we said. You have seen each one of these initiatives or each one of these issues, they bring some risks, but they are manageable. These risks are manageable. But what is needed really is that a top-down approach on the strategic level, deciding that these are very important and high potential initiatives that will bring perhaps efficiencies and will allow banks to reach to wider markets, open new services in a more efficient way, but needs some vision and working hard on this to embrace this opportunity.
Thank you very much, Dr. Abdullah. There is one question on the merger and acquisitions that seem to be started to be taking more in place in recent years. For example, in Qatar, we have Al Rayyan Bank is merging with Al Khaliji Bank. In other parts of the MENA countries, the same, and even it is the same in the Europe, the US. Do you think that is it more of a structural issue because of the developments and expected developments also in fintech, or is it because of the COVID? How do you approach the merger and acquisition? Are we going to see more of it in the region, especially?
Yeah, well, I think this problem of these mergers and acquisitions, I don't think it's related to the COVID specifically. And I think it's probably a structural point. We have been hearing this for a number of years. I mean, already from 2010, after the financial crisis, we hear this, because maybe like say 20, 30 years ago, when the Islamic banking started to be prominent, we saw a flourishing number of new banks, sometimes with very small size, perhaps even though their capital adequacy is good, but it's not enough capitalized to be reaching to the outside. So with this Basel III and the new regulations, so it's there is a need to have some scale. So regardless of the COVID-19 situation, perhaps the COVID-19 can exacerbate this and can show that banks need actually to be stronger and bigger and more capitalized, but it is not necessarily of this. Like for the last 10 years and even before, we hear many regulators and central banks requiring or asking banks to do some mergers. And we have seen here, even like in Bahrain, the last few years, there is a lot of talk on this. In the GCC, there is between also KFH and Ahli United Bank. There is currently between NCB and Samba, so which will bring one of the largest Islamic banks globally. And there are quite a number actually of this, and we think that this trend will be increasing more and more to bring higher efficiencies, because you are working on an open global market. So it's a must do. Just when how to do, maybe this accelerates, and perhaps after this even, we will see more of these mergers.
Yes, thank you, Dr. Abdullah. How do you see the strength of the local banks? Because right now we have fintech companies coming up and they are becoming part of the banks. But right now, the competition is not just coming from the other banks from other countries. The competition seems to be coming from the big tech companies, as you mentioned, like the Facebook. They wanted to come up with the Libra, and all the central bankers see the threats and now they're trying to come up with the central bank digital currencies. They are discussing it is quite a hot topic, and the opportunities, drawbacks. Definitely, central bank digital currencies are opening up all the large avenues, especially in the policy implementation. You can directly target how to distribute your money. You can even put some sort of expiry date for the money to stimulate the economy and so on. I mean, there are certain opportunities, but at the same time, there's a financial risk, as you mentioned, that if all of a sudden people wanted to withdraw their funds from the private banks, then they can do this 7 days, 24 hours. So the financial stability is not anymore from certain working days, but it is a 24 hours issue. So, and actually from an academic perspective, it is quite exciting. But Dr. Abdelilah, do you see that the region, and the MENA region, or the Islamic banks in general, are they let's say prepared enough to compete with the big tech companies? Because when we talk about Facebook, Twitter, I mean, you know, they're all trying to target the markets, and they are very much related with the where the banks are operating. Do you think that do you think that Islamic banks can even be more ready to compete with this big tech companies? And do you think that there needs to be some sort of regulations needed to protect the existing banks for unfair competition?
Yes.
Yes.
I'm hearing you. Well, it's a very, how to say, it's a very important question, actually. That is, I mean, need to think very carefully and to bring it to the front discussion by Islamic bankers themselves. When we talk about, if we say Islamic banks globally, I don't think there is like a global trend. So you have different Islamic banking by different countries. So, and what we think, for example, when you look at Islamic banks that are in markets that are very competitive, they kind of have to be more efficient and operate more effectively. And in others, maybe they follow this trend of the demand side, and they are not very aggressive. But we think, and you rightly mentioned, I mean, this big tech is different. So far, the trend, okay, you are competing maybe with conventional banks or even with other smaller Islamic banks is different. I think big techs are the biggest problem and the potential threat. And this is why regulators, they have started intervening in this and not seeing it well, actually, even though it was not said officially, but not many regulators see the involvement of, for instance, Facebook or others in a positive way. And we have seen even, for example, in China, where with Ant Financials that were about to be listed in Hong Kong through its IPO, and just a few days before, the regulators there imposed some very significant like requirements, and they had to stop the listing and requiring a little bit more. So not only in China, but also in others. So this is something that could happen more frequently, because I think the risks for financial stability are probably higher. And perhaps not only Islamic banks, but the banking sector not really ready for this like disruptive change. This will be something very big, because if you have all of a sudden like operators like this GAFA that have hundreds of billions of dollars in cash, so this is not like something you will be competing with very big heavyweights. So and not many, I think, Islamic banks can do it. Islamic banks, they will still have this, because we have a niche market. For instance, there is always some customers that look at values, that looks at ethics, but you will maybe see some of the margins go away, some of the services, for instance, the remittances, the payment services, which are less kind of of ethics and so on, of being used by the experts. But for business, we think this is, I mean, the opportunities are still not well used by the Islamic banks.
Thank you, Dr. Abdullah. It reminds me of a phrase that too big to regulate sort of story we have for the big tech companies, and it's really tough for the regulators. I mean, they don't want to intervene in the market too much probably, but at the same time, there are certain challenges. There is a question from the floor, I guess. I don't know who is asking, but could you please speak up and introduce yourself and ask your questions, please? Who? Yes, Mr. Izzettin, can you?
Yes, we have Mr. Abdelkader. I think he would like to ask questions.
Yes, please.
So, Mr. Abdelkader, if you wish, you can unmute your microphone and go ahead and ask the question.
Yes. Mr. Abdelkader, it will be great if you can also introduce yourself. Abdelkader, yes. You are still muted. Yeah. Mr. Abdelkader, can you unmute yourself? You will click on unmute.
Assalamu alaikum.
Alaikum salam. Alaikum salam.
Thanks for this opportunity. And I would like to say that His Excellency took us in a very good tour regarding IT technologies and their effect on banking and in the future. And the future is for Fintech and for artificial intelligence, no doubt in that. And they will take all our life to a new era, including finance and other things. However, as lawyers, maybe we think differently from business people. His Excellency Secretary General is a business-minded man, and as a lawyer, yes, we need all this development, artificial intelligence, machine learning. We need this. However, there are so many legal risks here, and so as to benefit from this development, from this technology, I believe the regulators should take care of also going line in line by putting necessary regulations. By regulations here, I don't mean to put something to curb the development or to stop the development. No, it is to strengthen the development and to make it free risk and to make it more appropriate. I do remember when IT technology started earlier in last century, as lawyers, we started to talk about the need for the legislations. And all business people and all IT people were against this. However, the United Nations came in and established a special committee, UNICITRAL Law Committee, so as to make law for promotion and legalization of
Mr. Abdelkader, we lose. Okay, we lose you. If you ask your question, that will be better. Probably we cannot hear you now right now. Yes, Mr. Abdelkader, we cannot hear you right now.
I think just a few points here, while perhaps getting connected with Prof. Warsam Abdelkader. Of course, I think Prof. Ahmed, you are also a former regulator. You were part of the central banks for 5-6 years at the monetary policy. So you know this problem, and you know how central banks usually are kind of in a dilemma between how to do. Do you want to supervise? Do you want to open to have like free markets, get market innovations, or be more stringent in terms of supervision and regulation? So you have this intervention versus open free markets. So there is always kind of risk. If you want to do more intervention on the regulation, especially of these new initiatives, then you're actually stopping the innovation. Some of the approaches, for instance, we said in some regulators, and this was, for example, in the UK, in Hong Kong, in Bahrain, Malaysia, and so on, is with these innovations, some of them they to have this regulatory box where they allow new operates or new business models to operate, because this is really the way you can encourage innovation. And of course, as has been mentioned by Prof. Wassam Abdelgader, there are risks. And we have been, mentioning more on the operational risk, cybersecurity, and so on. But there is very significant, like, responsibility risk, like legal risk. For example, in the case of smart contracts, if you are using smart contracts which are new, and like this contract that operates or that are executed based on a triggering event, who is responsible? When we talk about AI, for instance, if you have for example, an algorithm that have a certain decision, then who is responsible? Go to this way or this way? And already, this happened in some, for example, for the autonomous vehicles, accidents. Who is responsible? Is it the person who is the constructor, or is the operator, or is the one who is sitting behind the wheels? There are no wheels actually. So there are actually some legal issues that are happening. But again, there are some institutions that are working on this. As I said, there is the UNESCO. Regulators, they are in this dilemma. Do they want to encourage innovation or have more intervention? So I think so far, as long as it does not disrupt or disturb the financial stability, mainly, at least in our region, even in some of where I started, doing it the right way. So.
Thank you, Dr. Abdullah. We couldn't hear from Abdulkadir Warsame. Hopefully, if you like, you may write it in the chat box. But these are very interesting topics. Because everything is in transition. It didn't happen. In banking, generally, we are used to having very standard regulations, because the banking is one of the oldest business, whether it's Islamic or conventional. But in any case, it is very basics, like getting money from and then giving it to others. So it's an intermediation. But this digitalization is actually getting rid of all the intermediation. Or the intermediation is done through the machines. So it's quite challenging, and it's quite inspiring also from an academic perspective and from the curiosity perspective. And also new topics are coming. For example, Dr. Abdullah, you mentioned ethics of artificial intelligence. So let me make an advertisement of our college. We have Islamic ethics program, and because of these developments, they immediately come up with a new course. Inshallah, starting from the next semester, they are going to offer ethics of artificial intelligence. So I'm actually wondering about it. It seems to be a very interesting topic. So all new fields are coming up. And this is also for our young audiences. It's a nice place to invest, because it seems to be that the banking will not be the same. Even not just the banking. You also mentioned, Dr. Abdullah, this young investors. They're investing in very early ages to stock markets, to certain assets, like we observed the case of GameStop, or they are investing in certain cryptocurrencies in many places. So let me relate my question, and then we are coming towards the end. Do you think that Islamic banks can cater the needs of more of the youth, because they seem to be they don't have much wealth. They are not like large corporations or very wealthy people, but even their small amounts can sum up to a very big amount, and this is quite related with digitalization. Do you see some good examples on trying to incorporate the youth population? And I believe this could be quite helpful for the saving issues, because many of the developing countries where the Islamic banks are operating, actually there's a saving issue. Do you see from your member banks, for example, some good examples on targeting the youth and making them part of the financial inclusion?
No, yes, I mean, exactly. So I think what we have seen like the last few years, and there is a clear example. For example, we have in Bahrain and in other countries also, I mean, even in Turkey as well. In Bahrain, a few years ago, there is this pilot project by KFH, Kuwait Finance House Bahrain, using a fully digital platform like a bank, Jazil, which is called Jazil. And from the discussions which I have with the CEO of the bank and of the group, we see it's, I mean, traditionally, okay, so as I said, for example, some of these platforms, as I said, KFH, Jazil in Bahrain, using this fully digital bank where where customers can open their accounts entirely online. They can do even some wakala investments. They can request funding from their banks. I think it has been a very positive initiative, and I understand from the management of the bank that the youth endorsement of this is very high. So these initiatives, I think we are encouraged. I know also, for instance, in Turkey, Al Baraka Turk, which has rolled out their platform Insha, in even reaching out to customers in Europe, starting in Germany so far, and will be expanding to other European countries. So these are some of the initiatives. There are also some initiatives, for example, a partnership between some of the banks and these new startups and offering of investment services. There is some initiatives going around this, and will be, I mean, mostly perhaps in Malaysia, and which are worth mentioning. So I think there is an opportunity, and I would like to say also, I mean, looking at the banks, the business model of the Islamic banks and the core values of Islamic banks with ethics and sustainability, these areas are very appealing to general public, and more to the young generations, the 20s, 30s, which will be really the wealthy people of tomorrow. So I think this have a huge opportunity for the Islamic banks in the future. Some of them, and actually a number of them, they have already started reaching out to these customers, and I think from our side we encourage them to highlight this, and this is why from even in our we take care of these two areas, and we take them as really it's in our hearts is on innovation and sustainability, because we know combining the two, you are promoting in the same time, you are promoting the values of Islamic finance, and you are using I mean, innovations and tools that are appealing to the young generations. That will allow you to reach outside not only the Muslim populations, but everyone that is interested on the ethics and values of Islamic finance.
Sure. Thank you, Dr. Abdullah. There is one last question. Let me ask that question as well. We are generally having like 1.5 hours, but because of your presentation and the the interesting title of the topic and the content. We are a bit over time, so thank you for your understanding. There is a question. It says, can cryptocurrency still be considered as money since it does not fit the classical definition of money, as stated in your presentation? Medium of exchange, store of value, unit of account. If not, can we safely say that it will be always remain fringe idea? That fringe idea is about more than $1 trillion right now, so it may not be that fringe anyway. Yes, the floor is yours.
Yeah, no, I mean, well,
so, Dr. Abdullah, you may
I'm not saying
please turn off your video again.
Crypto, I think I would tend to see same. Yeah. Okay.
Yeah, if you turn off your video, I believe it is better. Yeah.
Yes. Fine. Yes. Yes. Okay. So I think it's a very good question and important question. But when we say it's not a cryptocurrency, I mean, this is actually how it is. As I said before, over time, at the beginning, there was a lot of curiosity on it. So people thinking, what is it? What is so the general public will say, well, it's a currency. Bitcoin is a currency. But when you look at the features, you actually cannot really say it's a real currency. But we cannot say it's nothing. So it's so the most used or accepted approach to it is to say it's a crypto asset. So it's an asset that can be used, can be traded, whatever you can say. So can be as a, I mean, and there is a lot of debate about this and still ongoing. So I'm not sure how this will land in the future. But for example, even when you talk about gold, so gold, okay, it's an asset. It has value. Why it has that value? So also like kind of question, because maybe it's rare. So you have these cryptocurrencies or crypto assets, and they are trade have value. So are they really currency? I think it's a crypto asset, and the future will tell us if they will really fall after the category of it.
Thank you, Dr. Abdelilah. Some of our attendees are asking for your presentation. Is it possible to receive it? Probably it will be good to distribute your presentation later on.
We will distribute the.
If you can send it to me, I will share it in the WhatsApp working group, inshallah. Some of our friends may receive it, or you may send an email.
No problem. I would like, I think maybe, yeah, I would like just, I think since we have this academia gathering, I would like to have a call for the academia to not hesitate to be working on these new topics and new areas. I mean, we have seen a lot of things that can be done, and it's by working on this, by exploring these, as we say, new open banking, smart contracts, AI, from not only from Sharia perspective, also from Sharia perspective, but not only, also from operational, how this can impact potentially the banks and Islamic banks. So I think we welcome all these initiatives, and we hope, and I like very much the program that you have said on ethics, which is something also very, very advanced. And it's, I mean, even on the conventional side, everyone is struggling with this. So in order to be ready for the future, for this coming future, which we know is coming, is already here. So we have to address also these issues and not be lagging behind and waiting for the conventional or to start this for us to start. So I would encourage all the academia to be working on this, and I thank you for the program that you are having on ethics for AI.
Thank you, Dr. Abdullah. Actually, you pointed out very good direction. Oftentimes, Islamic finance, Islamic banking is somewhat following the conventional side, one way or another. But once the level field is changing, and apparently there is kind of a paradigmatic shift from banking to fintech, we should even be talking more about fintech, and we should propose our ideas. I believe this is even a more prominent importance for the Islamic finance people, because then we can say more with our values and so on. Inshallah, thank you very much. I completely agree with you that it is the right time to talk and to think and to do the research first. Definitely, it's not just talking, but we have to talk on the basis of some evidence, and it is academically rewarding as well. I mean, this is the journals are more receptive. There are new journals coming up on these issues, and some of the very basic banking related issues seem to be becoming more obsolete. I mean, they are anyway well studied, but the fintech issues are there waiting us to study and to learn from the practice. And that's why I really appreciate what you are doing with this fintech reports, with the awards, with your seminars and conferences. And I would like to thank you again for being with us and for very nice presentation. There is one question: how do I register for the fintech working group? Actually, I send it again. Does it? Okay, you can. There is a link. Probably Mr. Izzettin may send the link again. I sent it to him, and it is up on the chat box, but I don't know who received it. So from the chat box, you can see that there is a group. Is it sent to everyone? I'm not sure. Mr. Izzettin, it will be good if you. Okay, Mr. Izzettin has just sent it again, so you may click on it, and please it is open to everyone. So it is a co-learning thing. I mean, we also emphasize the practice because it is not something that we learn these things in the textbooks. Textbooks are rewritten. They are just getting into the textbooks. We have a lot to learn from the practitioners, regulators, and all the associations, as we learned today from Dr. Abdelilah. Dr. Abdelilah, thank you very much again, and hope to host you in the other events in person after COVID-19. And also, by the way, for our audiences, let me also announce, for the next week, we have a conference. It is organized by our center, Islamic Finance and Economy Center. Dr. Nazım is the head of the center, and this is our annual event. There are very interesting papers, very important keynote speakers, and some of the issues are related with fintech. I'm sure you can check at our HBKU website, and the conference announcement is available there, so you can register. And it is 3 days conference, and it's a very nice one. I strongly recommend you to join our conference, inshallah. Again, thank you very much. After these announcements, it has been about two hours. Thank you for your patience. And again, Dr. Abdelilah, it was great to listen to you and to learn. Thank you very much. I'm looking forward to your new report, your new activities, and hoping to host you in Doha, inshallah.